Hi, I'm Tim Holdcamp, and it's
I'm
been a
Tim
while
Holdcamp,
since
and this
I
is a
did one of
test.
these posts, so I thought it was time that I did one and let you know what was going on. There hasn't been a lot of changes, and I don't anticipate there being any changes until after February, and mainly because of the election. Obviously, there's a lot of turmoil. Unless you've been under a rock, you know what's going on with that. And so I don't see either side deciding to do anything to free up the PPP money that's just sitting there, or to decide to do a second EIDL loan or anything like that, because there's no real advantage for either one of them politically at this point. So I don't think anything's going to take place until February. I could be wrong, because if anything, 2020 has taught me is that anything can happen. I mean, we could be looking at a Conway West administration come February for all I know. So you never know. It's been a extremely strange year, and I'm afraid we may be looking at 2021 being very similar. So nonetheless, let's get into what's going on right now, update you on the EIDL loan and the PPP. So the EIDL loan is still in existence. It will last until December the 29th. If you happen to know someone that has not received one, they can still apply. There's still funds available. Now, if you have been turned down for an EIDL loan, I would encourage you to appeal that decision. When you got that letter, there would be a email in which on that letter in which you could use to appeal that decision. I have had tremendous luck with clients that have appealed that primarily for the credit turn down reason. And if the reason is that initial determination was made by a computer and an algorithm, and that it had to be developed as a one-size-fits-all type situation, and it had to be done pretty quickly. And so there was just only so much they could do, and there was a large focus on weeding out fraud as opposed to, are we making a loan to a legitimate business, and and really true underwriting. So for instance, there's a minimum credit score on the credit situation. Well, credit score is not always a true reflection of what's really going on with a company particularly, but even in a individual's actual financial situation. So what we have done, for instance, if you had a low credit score and it was because you just didn't have a lot of debt, then what I would suggest you do is just write a letter saying, look, I don't have a lot of debt. What I do have is been paid well, and here's a few things that don't show up on your on a credit report that I have documentation that shows that I paid. And I always send at least 3 trade lines, and these can be things like vendors that you have accounts with. These could be insurance accounts that you pay. These could be utility accounts that you pay. All of these are things that don't show up on your credit report, but you pay on a monthly basis, that shows that you have a track record of being able to make monthly payments. And that's what they're focused on. And so also, even if you did have a low credit score because of some issues that took place, particularly in the past, and those situations that caused that may have been rectified, but they're still reflecting negatively on that score and on that report, then I would write a letter of explanation explaining what took place. This was this is the issue that took place. It's no longer a problem. And once again, 3 trade lines that have been paid as agreed, at least, maybe a few more if you had some negative credit, and submit that and ask for a additional uh, look at your financial situation. Now, if you applied late, or you're applying now, or applied in the last month or two, or any time frame where the reason that your credit looked bad was because of the coronavirus crisis, everything was paid fine. Then let's say the lockdown took place and you had to close your restaurant, okay? And for whatever reason, you didn't take advantage of some of these issues, or maybe you did, but they weren't sufficient enough to take care of it. And so now you're applying for the EIDL loan. Well, and your credit score had been drastically affected by that. Well, then once again, I would point those things out. Look, everything was fine before. You can look at my credit report that you have. It'll show you that. But, you know, I had these issues because of the coronavirus, and please give me a chance so we can keep this business rolling. And so I anticipate that would be looked at favorably as well. Now, I have had tremendous luck, at least with the folks that have had the credit appeal letter being accepted. North of 90% success rate with that. So they want to get these loans out. They just need to have some sort of documentation that they are being diligent with the government's money. So just be aware of that. I wouldn't let that turn down letter just be the end of it. I would appeal and send that out if I had been turned down. So keep that in mind. One of the other things that we'll run across is I wanted to remind you of the fact that if you got a loan that was over $25,000 on the EIDL loan, that the SBA received a lien on all of your collateral. And so that's not necessarily going to be on real estate because it's titled individually, and then it's not going to be on the actual titles of anything like automobiles or things like that, but anything else it will be. And the way they secure that is by filing with the state what's called a UCC. And that for most interactions of that collateral will not be a huge deal, but technically speaking, you should not sell any assets without getting the authorization from SBA. And what we're running across, particularly with a large tractor that a client of mine was upgrading to another tractor and using that one as a trade-in, they checked to see if there was any liens, checked out the state for a UCC, sure enough there was, so we had to get the SBA to sign off on that. Now it was, you know, some additional rigmarole. Hopefully that's a little smoother now because that was very early on. Hopefully they've got that process a little smoother. Things are running a little easier now, but look for that to be an issue going forward. Also, there's probably going to be more, you're going to hear this UCC lien more and more in the future because there's a lot of folks that got these EIDL loans, and so it's going to become a UCC search is going to become a commonplace situation in business lending from here on out, I would imagine. So just keep that in mind, and especially if you're going to be buying a business, existing business, it's a good idea to do a UCC search and make sure that if there is a lien or someone received an EIDL loan, that they make sure that they settle that debt during that closing process so that you're not buying any assets that have a SBA lien on them, or any other lien for that matter. It's not just an SBA lien that gets a UCC. Any lien can be filed down the state. It's just that a lot of lenders don't necessarily review that, but I do believe that's going to be something in the future just because of the prevalence of this loan that everybody's going to start looking at in the future. So just make sure you're aware of that. And the other thing is, if you do have to sell or move some of this, dispose of some of this collateral, SBA, we don't know exactly how they're going to handle this, but if any indication of how they handle things on a standard SBA loan is they're going to want to, before they sign off on letting you dispose of any collateral, they're going to want to make sure that you're replacing that piece of collateral with an equal or greater valued piece of collateral. They're not going to want to go in the whole collateral wise. So be aware of that. So you're not going to be able to liquidate a piece of collateral for, you know, working capital or anything like that. So just be aware of that. Now, one of the other things we're seeing is that they are requesting additional documents from folks. One of the things that I've seen is a single member LLC client of mine was requested that he produce the authorization where the corporation gave him authorization to enter into the debt service with the SBA. Well, that seems strange to him since he's the only owner, but technically speaking, you should have a meeting with yourself where you decided and voted to give yourself authorization to go take out a loan. So that was a simple process where he just set up some meeting notes that basically laid all of that out. Now, some people have those sort of authorizations already laid out in their articles of incorporation, and that would be sufficient too sometimes. So there's other things that they're requesting from a documentation standpoint that also are coming up, but nothing that seems to be particularly difficult or particularly unusual. They're just kind of tidying up files is all that it seems to be at this point. So the other thing is that seems to be a little alarming to folks, and we knew this was going to be a possibility. We hoped we would be able to avoid this, but it was always most likely kind of possibility, and that was that when you went to get forgiveness for the PPP, or when people are going to get forgiveness for the PPP currently, they're asked to list the amount of their EIDL advance, not the loan, but the advance, that portion that was free and clear, not calculated in the EIDL loan. Well, then that amount is being deducted from the forgivable amount of the PPP, which then makes it a PPP loan amount, which then makes it a 1% loan, basically, that's paid back over 2 years. And so that's got a little bit of a blowback from folks because they weren't anticipating that. But that's always been a possibility, actually, a very likely possibility. It was always their intent. We just didn't know if they were going to have the mechanism to actually enforce that. And so because of that, we were hoping that they were maybe going to let that drop. We didn't know how they were going to do it, but they found a way. So it's that's how they're doing it. So the other thing, now we're into the PPP. Obviously, folks are working on the forgiveness at this point. There is the EZ form if you're under 50,000. There's the full-blown regular form if you're over that. These things are going fairly smoothly. You make those directly to the bank where you got the loan, and I'm having some issues with people that are dealing with larger national banks or with the online lenders. Those are having a few issues just because there's nobody good to really talk to, or the same person, or anything like that to work out questions and what about this and what about that. The small local bank folks that are interacting with those are flying through without any issues. So another good reason to do business with a small local bank. But all in all, it's working fairly well for most people, getting those things forgiven or working towards that. I have a few folks that are having luck with that. So the only issue that I'm seeing pop up over and over again is on the EZ form. When you get to line 7, there's a tendency that people have to divide, instead of dividing by the 0.60, to multiply by the 0.60. For whatever reason, I found myself do it a few times in the beginning, and what the problem with that is it skews it, and so it looks like you're not going to get the full forgiveness amount, and so then that obviously kind of freaks people out a little bit to begin with. So just be aware, if you're filling out the EZ form, when you get to line 7, be sure to divide by 0.60. So not a big deal, but it is something that can be frustrating if you were expecting this thing to be 100% forgiven, and then you go through that process and multiply instead of divide. It will make you a little upset. So nonetheless, that's basically what's going on right now. tell you a little bit about what I hope to do with this channel in the future, and if you want to, leave some comments if there's something else you'd like for me to cover. But one of the things I'm hoping to get out here in a series of videos coming out is various standard 7A and 504 loan forms and filling them out, how to fill them out, what you need and what you need to have in place, and what's realistic for receiving a standard 7A loan and standard 504 loan, how those work and who you would get those from and that sort of thing, and what they can be used for, and just a little more than that. That would be a series of multiple videos, because that's both of those things are pretty in-depth topics. But especially if that would be of use to anybody that's watching this, if you could leave me a little comment, let me know, or if there's something else that you guys are struggling with. But one of the things is I would go through all the various forms and explain what each line are, the way I did with the EIDL loan and some of the other forms, and if that would be beneficial, if you could leave that in. And of course, if you're seeing this, I certainly would appreciate you subscribing. That would be beneficial. You know, trying to get as many people lined up on this as I can. I'm going to try to get a few more videos out to help folks. And if there's anything else, if you could leave it in the comments telling me what it is that would be beneficial from a business standpoint. Particularly, I am probably going to delve into some restaurant stuff. We're bringing a restaurant expert into our territory over the next several months of 2021 to help a lot of the restaurant folks. So I will probably have some restaurant heavy specific stuff coming out as well as we bring him in, and he helps educate me about restaurants and things that are going on with restaurants. So that will hopefully be beneficial, and I'll also try to translate some of those things to standard businesses as well. So anyway, once again, hit subscribe, leave me any comments about things you'd like to see, things that would be interesting to you, and I would be happy to do a video on them. Thanks. Take care. Bye.